Hey, this is Ryan with TrendLizard.com. So I'm going to take a look at RSX, which is the most popular Russia ETF out there, by request from Alexander. Alexander, again, thank you for sending me the email, and thanks for becoming part of the TrendLizard community. So let's dive into RSX here. It was incepted back in early 2007, chopped around for a little bit, and then absolutely tanked in 2008, lost a ton of its value, about 80% of its value, recouped a big chunk of that in 2009 and 2010 into the early 2011, and reversed again before reversing yet again off the 2016 low. So, I mean, you look at the life of this guy, and overall it's gone sideways. It hasn't really gone up. And to be honest with you, from a long-term point of view, RSX doesn't look that fantastic. I mean, you look at this up leg here, it was mostly retraced by this pullback into the 2016 low. That's a bearish sign. That tells me that this is not the start of a new trend. What it looks like to me is one large ABC advance, a counter trend ABC advance that's not yet done. It should head higher, but on any longer time frame, you really can't be bullish on RSX based on the Elliott wave pattern and what we're seeing here. So that's the long-term 30,000 foot view. Let's drill in a little bit and take a look and see how it might go about continuing on up, and what it should do eventually is move its way back towards the 2011 high in this C wave before it's all said and done. So I do think there's buying opportunities, but again, just not on a very long-term basis because the trend is not up on this time frame according to this chart. So let's go ahead and zoom in on this advance up to 2016 low. Here's what we have. Here's 2016. It's not the clearest move every step of the way, but it is trendy. It is a nice 5-wave move. There's some funkiness in here, but overall it's pretty clear that when it is heading up, it is playing out in trendy 5-wave patterns, and when it's going down, it is counter-trend 3-wave pullbacks. So this up leg that began in early 2016 ended almost at the very start of 2018, I think late January. Since then, it's been pulling back. But the thing about this pullback, it is very clearly a counter-trend move. This is not the start of a new trend. You can tell by the way it's chopping around and heading more sideways. So what it has done is it's actually retraced about 38.2% of this 5-wave advance here. And that's a very important level. It's a Fibonacci support level. It doesn't mean the low is in, but it means a low is possible at the low that it recorded back in September. So we're watching it pretty closely. This is actually one that's on our radar right now, actually on our trading board as one that we will buy if it can turn higher from here, but it's getting kind of dicey. So I'll show you as we drill down, but it's at a really interesting point right now. So again, overall, it looks bullish. It looks like this is a 5-wave advance, been followed by a counter trend pullback, and it looks like it's going to head higher, whether it's directly from here or after a larger pullback that would move deeper into this yellow support area. So the key level here is 16. It needs to stay above 16 at all times. Obviously, that's fairly far away, but that's the important level to keep in mind as far as having a bullish outlook heading forward from here. So let's go ahead and drill in a little bit further. We're going to look just at this 2018 action. Here it is. This is the pullback. This is why we're confident that it's going to continue heading higher. There's nothing trendy about this pullback. This is a counter trend move. It's choppy. It's very clearly a 3-wave move, and that's why it might have ended at September's low. So it had a really nice run off of September's low, stalled right at the start of October. No shocker with the way the market's going right now. And it has pulled back, and it is actually finding, at least testing, the lower end of another support area. This represents about a 61.8% retracement. Again, a very important Fibonacci retracement level, which just provides natural support to the market. So it's very interesting what's going to happen here as it tests this lower band of support to see if this low is over. So here's the deal. If this pullback is over. Here's the deal. So if it can find support here, basically if it moves much below 20, it's going to be a clear sign that this counter trend pullback is not yet over. I wouldn't own it if that's the case, because again, that opens up the door to a pullback deeper into this yellow area. Could go as low as 16. If it can find support here, then it's going to be a very bullish deal. It's going to look like this pullback is over and it's getting ready to kick off a much larger advance. Let's continue to zoom in and just take a look at this action here off of September's low. You can see that it does look trendy. The initial up leg looks like a 5-wave move, which is a trendy move. Since then, it's pulled back. It's a nice 3-wave move so far. It again has tested the lower end of our support area a couple times, has to find support here. If it does and turns higher and moves above 21.25, this becomes an immediate buying opportunity. This is one that I would recommend all my subscribers buy, which is why it's on our trading board at the moment. So that's the level to look to the upside. If it continues down, again, you have to expect it to go below September's low and continue even lower, potentially as low as 16. Probably wouldn't go that low, but that's the potential that would exist if it continues through this support here. So that's what we're looking at. So again, the key levels to watch are 21.25 to the upside and the area it's testing right now to see if it can find support and turn higher. So I hope that's helpful. I've got one more for you. Give me a minute and I'll get that one out as well. Thank you.